Hello, everyone. Welcome to another episode of the PowerTalk Show powered by Business Talks Weekly. Our guest today has been an entrepreneur for almost 15 years. He is the founder of Wealthrone Capital, John. John, welcome to the PowerTalk Show.
Thank you so much. Great to be here. Thanks for having me.
Can you tell us a bit about your background and what led to the creation of Wealthrone Capital?
Sure. Thanks for asking. Yeah, like you mentioned, I indeed have been an entrepreneur 14 years now. Although originally I'm from Finland, and I actually studied entrepreneurship as well. That was, at least by the time, one of the only schools in the world in Finland where you can study entrepreneurship in a way that you actually were kind of forced to launch a business and run the business. And that's how you got the degree, because you definitely cannot learn entrepreneurship from books only. But yeah, been doing different things, some less successful and some moderately successful during the journey. I think I have had, let's say, maybe 10 different businesses. And especially in the early days, the idea was just to test out what works and what not, and learn by doing, and then go to the fire and see it how it works out. Wealthrone was launched 4 years ago, and more serious, we have been around 1 year now, as we launched a hedge fund one year ago, and together with my business partner, who is also from Finland, called Teemu. And yeah, that's where we are at the moment.
Wonderful. John, can you tell us a bit about what challenges are you trying to address with Wealthrone?
Yeah, first of all, think that entrepreneurship is basically about challenges. Like whatever you do, and in whatever business you are in, when you first check the emails or whatever communication method you are using first thing in the morning, most likely there are more challenges than solely positive news. So if somebody knows a business model where the entrepreneur itself is getting only positive news, like happy to hear more about that. But yeah, for our customers who are our investors, we are running hedge funds with Wealthrone. What we specifically try to do for them is to discover market inefficiencies and undervalued assets. So at the moment, our core product is focused on market neutral arbitrage in the digital assets market, meaning that build our own software that is constantly scraping the markets, trying to find arbitrage gaps, and taking those positions, trading positions, in a way where arbitrage by definition aims not to risk the capital, but only take positions where it knows that we are going to win. So as some of the markets, capital markets are still inefficient, that's what we are trying to harness for our investors' benefit.
That's wonderful. So you mentioned something about automated trades. So how does it happen? Like, and are you making the trades on behalf of your investors?
Yeah, so technically, when somebody becomes our investor or our client, that investor invests into our hedge fund, so technically becomes a limited partner of the hedge fund, where we are a general partner and the hedge fund manager. So how it works for them is that we are managing their capital according to our mandate and process, what we have told them and the regulatory authorities to do, and then our software executes the trades in different exchanges, and basically then they will see the results. So the trading part itself is very hands off for them.
Understood. So, John, the AI and tech advancements are currently rapidly evolving, and I have read articles, I have even tested some platforms which is AI enabled and provides you with insights, market news to make the right trade. How do you look at these platforms, and how does AI play a pivotal role in developing such a platform like yours?
Yeah, I completely agree that, whatever is your business, if you try to ignore AI or even not taking full advantage of that, you are lagging behind, like for sure. That's, you just cannot avoid it. It's like internet used to be. You can try to avoid it for a certain period, but anyways, everything will be there and everything will be connected. So first of all, we use AI a lot, both in personal and the business tasks. But specifically what you asked, we are not trying to predict the market. As many these AI tools are suggesting that, depending, some are talking more about trading that is based on technical analysis and some on fundamental analysis. So as an example, an AI tool that is based on or is giving suggestions according to fundamental analysis, they may suggest that because this company has a new CEO, most likely it will do well in the future. While from the technical analysis part, some AI tool or a person may suggest that because the trend pattern looks like this, now most likely it is going up. We are not doing either of those. We are not trying to predict where market is heading, as our trades are either market neutral or beta neutral, meaning that the market environment, or in a sense, it's not necessarily, I'll put it this way, when we do market neutral arbitrage trades, it doesn't matter for us very much where the price of the asset is going, if it's going up or down. We don't make more money for our investors if the assets prices are going up or down, as we are trying to focus the inefficiencies and the arbitrage gaps in the market. So slightly different game than what you mentioned.
Yeah, absolutely makes sense. John, as you mentioned something about market, I want to understand from you. There's been tariff wars. There's in some places there are some global economical uncertainties. How do you look at market scenario, and what do you see in 2026? How does the future look like?
Yeah. In general, I wish that I could be positive about the futures of the markets, but that's not necessarily where my personal head is at in terms of where markets are going and so on, which is solely my personal view, not representing
Yeah.
our company view or our investors' view, but solely my personal view is that the markets have been flooded with too much of currency, as there is way too much of new currency from central banks and the governments, and from the structure that how it works coming to the markets, that drives inflation, or actually causes inflation and drives prices higher and higher and higher. And let me put it this way, that let's see how long that can last. But obviously, like I said, that is not kind of what we are doing. I'm not trying to predict short term or long term where the markets are heading. We have already seen that some assets that cannot be that easily inflated necessarily, like Bitcoin as an example, that has only 21 million Bitcoins, has been doing relatively well in the past few years, not solely because of it has a limited amount of Bitcoins, but maybe that has been part of the reason. And that is not an investment advice, to be clear.
Absolutely makes sense. John, like you have such a huge tenure, 15 years on your entrepreneurship journey, multiple brands, multiple startups. What has been your biggest challenge in growing and scaling a company?
The biggest challenge? Wow, that's a good question. First of all, I think that we as entrepreneurs tend to be quite optimistic. Like, that's part of why we are entrepreneurs, because we assume that good things will happen for us, and we take bets, we take risks, and we see the future of our business is bright. And I think that I'm personally very optimistic as well. So maybe sometimes an approach, like I said, my approach has always been really really hands-on. Let's go hands-on, and let's just see, let's learn by doing, not by reading books, which is a great thing to do, by the way, as well. And anyways, learn by doing. Especially in the past, for sure, I could have put more focus on some risk management type of perspectives. But at the moment, with Wealthrone, like I said, my business partner and dear friend Teemu, who we are partners, he is a pilot by education, and driving, sorry, it's not driving, it's flying a plane is a lot of risk mitigation, and not like don't crash the plane type of a thing. So he comes kind of from a perspective where all the risks need to be mitigated and to the maximum, because the plane will crash if you don't. So I think that complements us very well. So answering to your question, I don't think that as an entrepreneur, being really optimistic about the future is necessarily a bad thing. I think it's great, but paying some attention to the risk management and what can go wrong and preparing a bit of that in advance might be, for a person who is similar personality type than myself, might be a valuable thing to do.
Yeah, wonderful. So, John, can you give us one lesson that you would suggest or advise other entrepreneurs to avoid?
Absolutely. My by far the favorite one, by far the biggest advice for me to give would be that for a new entrepreneur, that before you start to really put your energy, effort, capital, and mind and everything to the business, think that the actual business model really, really well in a way that there are, from my point of view, there are businesses that require a lot of upfront effort or a lot of presence in a way. I can give a few examples. So my very, very first business was renting out motorbikes. That business, well, obviously that was a great kind of test getting into the entrepreneurship, and that was part of my school. So as mentioned in that school, we kind of needed to set up businesses. So, but the problem with renting out motorbikes are that you need to be there, or somebody need to be there to physically hand over the motorbikes. At least by the time, maybe nowadays there are apps and so on. Cars are for sure easier than motorbikes. Anyways, then you need to have the motorbike, the physical motorbike, and some things can happen when the customers are riding especially motorbike. Once again, there might be crashes, there might be different things, and expanding into another markets would require more motorbikes, more people, or more apps, and anyways, kind of an inventory or a fleet in this case. So there is expanding and growing the business is not very easy because you need to put more and more capital into it, and there's a lot of physical presence. Then the next thing that what I did was consultancy, and that removed the physical motorbikes from the picture, but I still needed to be there physically, like myself, because it was that consultancy was relied on my personal knowledge. And then the next thing after that was e-commerce, so selling online. And there, the great thing was that now I didn't need to be anywhere, and there were no motorbikes that specifically needed to be anywhere. A lot of goods were still moving around the world. We were mainly selling to USA and so on, and that's already quite good compared to the first ones. And then next kind of part or next step from that was to have a team who is then managing a remote online business. So you are less needed there. And then the Wealthrone business, we do have a team, but we are not anymore moving anything physical as we are trading. So nothing can go wrong in that sense that there's a boat or a cruise ship or something stuck in a canal that blocks the shipments in from one country and another and so on. So that's what I mean by business model, that there are business models that do require certain things, and then there are business models that won't. Obviously, if you are a certified, let's say, massage therapist, most likely you need to be there and you need to have a physical place where to do it. Personally, for a new entrepreneur during this so-called modern time, I necessarily wouldn't suggest a business that requires a physical presence both for you and maybe a store or a shop or similar, and then an inventory as well. It's quite capital intense and also requires physical presence, and you have ongoing costs constantly, just like by existing. Like in my first business, the motorbikes insurances were running, and then the payment plans of the motorbikes, they were running constantly, even though if you wouldn't have any customers. So for a new entrepreneur, I would suggest something like that does not require much of upfront capital. Then later on, when you do have the capital to invest in the business, then it might be a better idea to do it. Yeah, we always tend to say that we don't want to be next BlackRock. We want to be bigger than BlackRock in a sense that go big or go home has kind of been the mantra, in a sense that for me personally, it's much nicer to do things that have unlimited potential, so to say, comparing to, again, for example, renting the motorbikes. Kind of has unlimited potential, but that would require a lot of motorbikes.
Yeah.
in different cities and different countries and so on and so on. So with Wealthrone, we are not rushing, but still aiming to grow rapidly.
One final question, John, to you. As you are into the business of wealth management and growing finances, what has been your biggest financial lesson?
Not to lose capital. When we were starting with Wealthrone, we, with my business partner together, our really first strategy that we were testing was doing really well. And then we had a call with him, and we were thinking that it's doing quite good. Should we put a bit more leverage there to basically be more risky, more rewarding? And we agreed yes. Then it was doing even better. So we had another call next week. Should we maybe put a bit more leverage here? And we agreed, yes, we should, because it's doing even better. And then it did even better. And then we had another call next week, same thing. And then 1 week after that, it all collapsed. And it was only our own capital, which was kind of where we were able to take the risk, because we weren't by the time managing anyone else's capital yet. But still, that because it was going so well, the amount of money had become significant for us by the time, and that we decided by the time that okay, now we are gonna turn this into a positive experience of let's not do this or anything similar ever again, and let's aim to not to lose money. And as long as wealth managers, I think that business-wise, as long as you don't lose investors' money, you're doing okay. Maybe you do better returns or lower returns, but as long as you don't lose at least any significant amount, of course there will maybe small 2% drops or something similar, but as long as you aim to not to lose money, I think it's pretty
Lesson learned.
yeah, definitely. Yeah. We do remember that. We do remember the phone call or actually the video call that we had the next morning, and we do remember any step, but how did it actually feel?
Thank you so much, John. It was a wonderful conversation. Thank you so much to join our Power Talk show today.
My pleasure. It was great to be here.
Thank you.